Hey, what's up, my friend? So in today's episode, I want to talk about how to identify trends like a pro. So I remember, right, in my early years of trading, I think the first year of trading where I just started trading Forex, right? It is really cool, right? This market you can trade across so many time frames, so 5 minutes, 15 minutes, 30 minutes, forward, daily, weekly, etc. So here I was, right, in front of my terminal trading the Forex market. So I was on a 5 minutes time frame and I noticed that the market is in an uptrend. So in an uptrend, I should be buying, right? So that's where I started to, just to seek a little bit of additional confirmation. So I click on the daily time frame and see, to make sure that the trend is, similar. And I was shocked when I saw the daily time frame is in a downtrend. So this was one of my first experiences, right, in trying to trade with the trend. It's like the 5 minutes time frame is in an uptrend, the daily is in a downtrend. So should I be buying or should I be selling? So I was confused, right? Really confused for the longest period of time, right? You're trying to define the trend, trying to use multiple time frame analysis and stuff like that. So in today's video, I just want to share with you this simple technique, right, to help you identify the trend so you don't get confused like me back then. Number one, you want to define your trading time frame. Okay, so here's the thing, right? If you are, let's say, a longer term trader, right, you're trading off the daily time frame, then you want to define the trend on the daily time frame. This means, right, if the trend on the 5 minutes time frame, the 30 minutes time frame, the 1 hour time frame, it's irrelevant to you. It's noise to you because it is not within your trading time frame. So again, let's say you're a short-term trader, you trade off the 15 minutes time frame. This means the higher time frame, like the daily, the weekly, the monthly, right, it won't be relevant to you because you're primarily a short-term trader. You are just trading the trend, which is happening right now. Whatever the long-term trend is, right, is none of your concerns because by the time, right, you would have entered and exited the trade many times. So first thing you need to do is to define your trading time frame. That's one. Number two, once you've defined your trading time frame, let's say I am trading off the daily time frame, then on your daily time frame, you want to always be having the same number of bars on your chart. So for me personally, right, I usually have, right, about 300 bars on my chart, right? So I will zoom out the charts a little bit and there will be about 300 candles on the chart. And you want to be consistent with this. Reason being is that, let's say sometimes you have like, 50 bars on your chart and sometimes you have 200 bars on your chart. What's going to happen is that you will see different types of trend. Because I'm sure you can agree, if you have only 50 bars on your chart, it will show you a different message compared to you having 200 bars on the chart, right? One will show you the big picture, and one will just show you the tiny micro vision of what's going on right now. So when you identify the trend, right, my recommendation is to have at least 200 bars on your chart to kind of give you an idea of the bird's view of what's going on in the market. So at least 200 bars on the chart and be consistent with the number of bars on your chart. Okay, that's number two. Number three, once you've done, defining your trading time frame, once you have a consistent set of number of bars on your chart, the third thing to do is just to look at the price action and ask yourself, right, is the price making a series of higher highs and higher lows? Or is it making a series of lower highs and lower lows? Or is it just contained within the range? So, for example, if you see that the market is making a series of higher highs and lows, then you can conclude that on this particular time frame, like the daily time frame, the trend is up and you want to be buying. Or if you see, if the market, right, the range, right, the highs and lows, they are pretty much of equal area around the same level, then you can conclude that this market on this time frame, it's in a range and you can either buy or sell. This way, right, if you follow this technique, right, you will never get confused, right, to whether you should be buying or selling ever again, right? So just a quick recap. Number one, define your trading time frame. Number two, have similar number of bars on your chart each and every time. My recommendation is at least, 200 bars. And number three, right, just observe the price action. Is it hitting up higher over time, lower over time, or is it in a range? Simple. So with that said, I have come towards the end of today's episode. If you've enjoyed it, hit the thumbs up button, subscribe to my YouTube channel, the button is all below, and I will talk to you soon.